for connecting and welcome to the Geneva Impact Talk, tapping into the impact opportunity, how investors and entrepreneurs co-create value. My name is Renate. I think most of you know me already. I have the pleasure to be one of the co-founders of the Geneva Microlabs, also the vice president, and I will be moderating this online talk today together with our president and the other co-founder, Dr. Ekkehard Ernst. So I could already see many familiar faces, some new ones. For us, it's always interesting to understand how international our audience is. So please leave a comment in the chat from where you have dialed in today. Most of us have been on video calls over the last month, so I think we know that it's important to be muted if we are not presenting, and if you don't want to be seen in the video that we are recording today, please feel free to switch off your camera. And also, please use the chat box for your comments and questions. Most of you and most of us already know the Geneva Microlabs as well. We are a do tank located, headquartered in Geneva with a big community around the world. And we try to support sustainable development by leveraging the intellectual potential of our community and by bringing leading minds together. And with this new format of the Impact Talks, we are supporting our latest initiatives that we call Geneva Impacts, and where we want to make impact more transparent, more measurable. And we want to give a platform to experts who share their experience, who share their insights, so that we can learn from each other, that we can inspire each other, because we don't have to invent the impact wheel over and over again. Today, let's look at best practices, how we can use impact investing to support SDGs. And it's a pleasure and an honor for me to present two experts in this field who are here today. Professor Vanina Farber and Dr. Peter Wuffli, a warm welcome to you both again, and thank you for joining us today.
Thank you, Renate.
Yeah, thanks.
So Professor Vanina Farber and Marianne, if you would like to, oh no, it's me who has to share the screen. Sorry. Voilà, here we are. Thank you, Marianne. So Professor Vanina Farber is the Illyaway Professor for Social Innovation at IMD Business School in Lausanne. She's an economist and political scientist specializing in social innovation, impact investment, and sustainable finance. Professor Farber has almost 20 years of teaching, researching, and consultancy experience working with academic institutions, multinational corporations, and international organizations. And she's also the holder of the IDEA Chair for Social Innovation. Vanina is also a proud mother of twins. Her co-speaker, Dr. Peter Wuffli, is the founder and the chairman of elea Foundation for Ethics in Globalization. He's also a honorary chairman of IMD and a member of the advisory board of the elea Center for Social Innovation at IMD. Dr. Wuffli serves on the board of Signum, and he is the vice chairman of the Zurich Opera House. Previously, he was a partner at McKinsey, a CEO at UBS Group, and chairman of Partners Group. The fun fact, Peter was fascinated with globalization already at age 15, when he was a radio amateur and connected with the world. We now very much look forward to your questions, to your answers, and also to the questions of our audience. Let's tap into the impact opportunity now and discuss how investors and entrepreneurs can co-create value. And with our new format, the Impact Talks, we have slightly different structure. So we will discuss 3 topics. Our speakers will answer to some questions. And then after each topic, we will open the floor to your questions. There will be a short Q&A session before we then give the mic back to our speakers, and then again open to the Q&A, and then for a third question, our speakers will present, and then we open the floor again to our audience. So just to let you know, please feel free to post your questions and comments already from the beginning in the chat box, because then you will be heard during the Q&A. So let's kick off with our first block, with our first topic. How does philanthropic impact investment differ from angel investment? Vanina, would you like to help us understand a little bit better what impact investment is about?
I think when we talk about impact investing in general, because if you think about the word impact, is very general, so you could say that any investment has an impact, but the definition or what differentiates impact investment is precisely the intentionality. So the impact is intentional. Now, and in order to also make sure that those intentions do not stay in words or that you do greenwashing, that impact also has to be measured. So two key components of impact investment are intentionality and measure of impact. And since this still is an investment, I would say the other key that you will find in the literature definition is the expectation of returns. And you can have philanthropic impact investment that has very concessional type of capital or below market, that accepts below market returns, to market returns and finance first type of impact investment with more commercial type of investors. But usually the key three components will be expectations of returns, intentionality, and impact. And the last one that I think is more important for philanthropic impact investment, and I know especially for the Foundation and for Peter, is the idea of additionality. It's the idea of building a market that wherever you invest or you use these investment tools, the impact wouldn't have happened otherwise. So that you really can have certain type of attribution or market building that the market wouldn't have worked if the impact investor was not there. So this is kind of in a nutshell.
Yeah, very good. So the market wouldn't have worked if the impact investor wouldn't have been there to encourage the
and that is more controversial. Not all the impact investors, especially some commercial impact investors, the part of additionality is discussed. But the other three are really core to the definition.
So maybe adding to what Vanina said, and within the context of what we do at the Elea Foundation. Elea Foundation was created in 2006 by my wife and myself with a purpose to fight absolute poverty with entrepreneurial means. When we talk absolute poverty, we talk $3 and less daily income. Now, in 2006, the term impact investing did not yet exist. So we only found out later that what we were actually doing was impact investing, exactly along the definition that Vanina described. So we want to fight poverty with entrepreneurial means. We want to make investments into companies. And we have chosen 4 investment themes. They have to do with global agricultural value chains. They have to do with informal retail and last mile distribution, with employable skill building, and with digital solution. We invest in young companies. We call them post-startups. So we don't invest in kind of prototypes, in concepts, in white papers. So we invest in real businesses, real companies with real products, real clients, real teams, real revenues. But we do so at a very early stage. And then we stay invested for any time between 5 and 10 years. And because we invest in young companies at the stage where these companies are still quite unstable, they have a lot of things to still get fixed. They typically have still quite a volatile strategy. They do not yet have a stable organization. They do not yet have stable governance. We are a very active investor, and that's maybe one of the difference to an angel. So we are an institutional investment organization. We have a team of 20 professionals. We do a really thorough job in due diligence. So several months of intense due diligence before we invest. We're highly selective. And because of what it takes to first find and evaluate and then support these early stage companies, we call it philanthropic impact investing. So while it is impact investing, while we do have return expectations, the sheer fact of the size, the small size of the organizations, plus the intense support that we give, make it very unrealistic that across all investments we will have net returns. So that's why we have coined the term philanthropic impact investing, in the way being the first institutional investor after friends, families, and angels with new impact companies, and with an expectation to be the last philanthropic impact investor before more commercial, more return-oriented impact funds would invest in these companies.
Thank you very much. So that is really like a unique positioning. And when you think of Europe, when you compare it, for example, to the US, what change of mindset would we need to have startups who want to get sustainability done?
I don't know if there really a change in mindset necessary. I think you can find startups, and if you think about big corporations in Europe or in the US, so I think in general, but I don't know that if it is a European or a US or a Latin American. No, I really think you are seeing a younger generation that is not seeing impact and returns as something dichotomous. So I would say in that kind of mindset, but we're seeing that kind of mindset also in corporates changing. Before you would see, okay, we do impact through philanthropy and we win money through traditional commercial businesses. And I think those barriers are starting to get blurry in many cases. No, but I wouldn't say that that's just a Europe versus US or a North versus South idea. No, I think we're realizing that businesses are part of the ecosystem and actually a very powerful tool for good. And I am a believer that actually those that have the privilege of I don't know, an education like IMD, etc. Many times the challenge sometimes is the creativity, you know, and so put that education to good use. But also I think that we can learn a lot. I come from Latin America, from Argentina. I lived in Peru. We can learn a lot from developing countries' business models and frugal innovation, and also. So I think, again, the mindset of aligning business and impact is the key driver, what I would say, of social entrepreneurs or impact entrepreneurs.
And I think here we've seen a huge momentum building in the last 10 to 15 years. I mean, when we started 15 years ago, I would have said that it's really hard to find really good investment proposals. Today, we are flooded with investment proposals, and the real challenge is essentially to kind of do proper due diligence and determine which are the ones that are promising versus those where there is not really a kind of a promising case for impact. But I think there's huge activity going on in all parts of the world. I mean, we see lots of investment proposals in Africa, obviously lots in Asia as well, in South Asia. Our hubs are Kenya and India, where we have most investments of our 20 active investments. So huge momentum. And in our book, the mindset, I think, is there across sections in terms of geography, cultures, but also society sectors.
Yeah. And what separates the promising ones from the not so promising ones? Can you...
Well, as I mentioned,
read the book, read the work.
as I mentioned, we do intensive due diligence, and a lot has to do with the personality of the entrepreneurs. I mean, we seek social entrepreneurs that are truly committed, where the motivation is real, where the kind of ambition is for 10, 15, 20 years, even sometimes beyond their generation. And I think that is what makes investing in companies as opposed to investing in projects so much more sustainable. I mean, we have invested in projects, and of course, I'm not in the camp of bashing traditional development aid. I mean, there is a lot to speak for traditional development aid, and it has improved in many ways. But the difference is always when you have a employed project manager of a large organization who tackles a very specific problem that has been defined in a project plan with boxes to tick and with time plans and with activities and with milestones. As soon as this employed project manager leaves and is no longer employed, you can guess a few years later, the impact will often just be gone. I mean, that's okay if the task is temporary, if it's, for example, about building a piece of infrastructure or doing a very temporary kind of task in addressing a social issue. But if it is about sustainably changing the world and creating value and fighting poverty, it is so much more sustainable if you have an entrepreneur at the heart of an initiative who thinks decades and not months.
Thank you. That makes sense.
On my side, and I know Peter agrees because it is part of the elea way of doing a due diligence, but that he can reply after, is also spotting the social innovation. I know I have a chair on social innovation, so I'm a little biased, but a social innovation is kind of the idea of a novel market solution to a social or environmental problem. And I think that's kind of the first. We were talking about intentionality, and the case of elea is fighting absolute poverty with entrepreneurial means. But the first question that they also ask is there something new in this business model that the traditional commercial model that actually solves the problem in a more efficient and effective way that brings higher impact? So the idea is to really transform products, transform processes, transform business models to do things different, and that social innovation should be able to scale up. So it's not just a small thing that can be done in a particular context, but it can scale up. And when it scales up, it also scales up impact. It reaches even more people. Because in some cases you're going to see some ventures that when they try to scale up, they try to cut costs and they actually drift away from impact. So that's not the idea. The idea is the opposite, that the larger they get, the more they grow, the higher the impact. So spotting that innovation, that new way of doing things, I think is you need a very keen eye, because sometimes it's not where the entrepreneur thinks it is. And by working with the elea Foundation, by pivoting, by transforming the business model, by this patient capital and this co-creation, these conversations, I think is where the magic happens. And you see that a lot on the elea entrepreneurs.
So we employ three basic criteria. The first is exactly as Vanina said. Is this an interesting, impactful business plan that has a sustainable promise to fight absolute poverty? The second is the personality of the entrepreneur. Is he a credible entrepreneur who we can work with? And the third is, can we as an active investor add beyond money? Can we help with expertise, with providing access to knowledge, with practical problem solving, with contributing to governance in boards, and so on. So these are our three main criteria.
Makes sense. Thank you. I hand over to Ekkehard now. We already have some questions who came up in the chat box. Ekkehard, you have the floor.
Thank you, Renate, and thanks to both speakers. Actually, we have one question from Claudia, but before I give her the floor, I wanted to actually follow up on one of the things that you said, Vanina, at the very beginning about market creation. Because I mean, one of the things that we face in some of the impact areas, especially around climate change, is that there is actually no market. And the question is, can private actors create this market, or how can they overcome the fact that there is no market? I mean, if you can maybe tell us or give us some examples of what you have seen in your area of expertise. How that...
I do feel there is a great power of market building precisely for philanthropic impact investors, for foundations, or even for developmental institutions to crowd in additional private capital, more traditional investors, because since they can take these lower market returns or have more patient capital, they can work de-risking projects, going where more traditional investors wouldn't go. And I think that's why I like the idea of additionality. For me, that should be part of the goal of going into places where more traditional VCs or more traditional investors don't go, rather than really crowding out. If you have I don't know, in clean energy, already commercial capital that wants to go in, don't go into that one, go into other sources, I don't know, hydrogen or things that are more at the forefront. It is always hard to prove the additionality than to go, but I think the that also requires a mindset change sometimes on developmental institutions, and again, okay, will be bearing and some ethical questions. I also like the ethical side, because sometimes if you ask, I don't know, a developmental institution that brings taxpayers' money, you're going to say, should we go and bring revenues or profits to private capital that by de-risking projects, and how we do with things? So it's not an easy solution, but I do think philanthropic impact investors and developmental institutions can precisely be market creators or market drivers. Yeah.
Thank you. I think, Claudia, you had a question. If you want to unmute yourself and ask the question directly. Are you still with us, Claudia? Maybe I can ask her. Maybe she can't hear us. The question was exactly on this long-term perspective that both of you mentioned, and the question was like, is investing 5 to 10 years? How does it keep you motivated to stay so long compared to alternative investments that are much shorter time horizon?
Well, this is very much a function of the operating model of the Elea Foundation, which has in a way 3 elements. The core of it is finding new investments, doing due diligence, and then staying involved until at some stage there is an exit to a kind of other ownership structure. The second element is our kind of support group for Elea Foundation, which is a group of philanthropic investors. They are technically donations. I mean, we are a tax-exempt foundation, but we treat them very much as long-term investors. We give them reporting. We build a community. We have about a group of about 40 entrepreneurial families, foundations, companies. For example, Accenture Switzerland is one of our long-standing partners who not only gives us money, but also expertise. They are with us now for 10 years already. And the third element is our team. We have said from the outset, we want a professional team. We want the kind of philanthropic impact investing to be a career. We have a talent program where we hire young people. They can make a career with us. We invest in them. We have a performance culture. We want them to succeed. On average, they stay, I think the latest number is about 6 or 7 years. And so this is a flywheel. It's like a flywheel where these 3 elements reinforce each other. So if we have great new investments that attracts new philanthropic investors, that again allows us to fund our team, and that again, in a way, helps us to find new investments. In a way, we are very much like a kind of private equity institute where the time horizon typically also is about 10 years of the investments. That's what we're looking at.
And from outside, let me tell you that it's something that doesn't lack with the Elea team is passion. And I have the opportunity to sometimes to write cases and to share or invite them to my sessions. So entrepreneurs evolve so much under different challenges, and during this period, especially, I would say in this early stage, and how they develop the business model. And it's such a high touch business model that you are going to see that those that lead the relationship with entrepreneurs have really a high level of personal motivation and relationship with entrepreneurs, and it's really a partnership. So it's not an advisor or a consultant that just goes for a specific project and then leaves. You really see that partnership relationship going on, and I think this is why it's such an interesting model that I pushed Peter to call it even the Illyaway, you know, that it is really a very specific and motivating way of working.
And this relationship has never been more valuable than in the last 12 months during COVID, because we were sometimes the only real passionate and involved and engaged investor helping these entrepreneurs to cope with these enormously fundamental crises and challenges to, on one hand, survive, while at the same time sometimes reimagining the total business model in a situation in countries like India, like South Africa, like Peru, where conditions are much more severe than what we see here in Switzerland and Germany.
All right, thank you. We have a couple of more questions, but I think I give it back to Renate, and then we have the follow-up round two.
Thank you, Ekkehard. So Peter and Vanina, you are authors of a book that's called the Illyaway. It's a learning journey towards sustainable impact. And how come that Dr. Peter Wuffli, who has a career in the private sector, and Professor Vanina Farber, who has a career in the academic sector, write a book together?
Well, that dates back to a kind of 10-year anniversary that we celebrated about 5 years ago at elea, when we took stock on what we achieved during the first 10 years, but where we also took some lessons and developed some objectives and some ambitions for the next 10 years. And one of the ambitions was actually to share our learnings and our insights, because we felt that with this, at the time, I guess, even more pioneering approach of impact investing that was quite new when we started, or very new when we started, we felt that we wanted to just make all what we learned, all the lessons, all the insights, and also some advice to others who have similar plans available to a broader audience. And against that background, we donated the chair to IMD. I've been involved with the IMD board for a quarter of a century. I was the chairman of IMD for about 10 years. And so I knew IMD very well. And so we donated the chair and we created a center, the elea Center for Social Innovation. And then we were privileged and lucky to find Vanina. And once we have found Vanina, we kind of started to brainstorm about different projects. And one of the early initiatives was actually to write a book together, because we felt that that would be a very powerful way to convey what we learned, but also, quite frankly, to get to know each other, to and to combine her kind of academic kind of perspective on things with our practical learnings. And as Vanina already alluded to, she takes full credit for the name. I would not have had the courage. I would not have had the courage to call it the Illyaway, but Vanina then said, "No, this is a pretty distinctive approach that we have pioneered," and so that's the genesis of the book.
Yeah, I had to push for to take out all the we think, we feel, we say, own it. I don't know. in the process. But I think I feel very privileged to hold the chair and also to have worked with Peter as a co-author of this book. Sometimes can be a tricky thing when you think the donor of it, but I think we actually got to know each other, and also I respect the work and the work ethic of Peter, and also the quality of the work that he brought to the book, were really the heavy lifting of the book. And I try to add value from an external view of an academic and from a pedagogy side. We really wanted this book not to be another book on impact investing. So we try to have a more holistic type of view that combine impact investing, but also impact entrepreneurship, no? Because we believe that both need to be seen together. It's not just about putting money, or it's not just about finding solutions. The magic happens when you integrate both. And also, we wanted a reflective piece. So if you see after each chapter, there is a part where you have learning objectives, when you have questions that you should ask yourself, and when there are like right versus right decisions, so ethical dilemmas, because really the nuances happen in practice when you need to make these decisions. The definitions, the academic definitions, are relatively simple, as I gave you at the beginning, no? But when you have to in practice to actually make them come alive, I think it's when the book gets very lively. And I think Peter also brought the amazing elea entrepreneurs that without the stories, their business models, and even their struggles, this book wouldn't have been possible. No?
Oh, and what is the book about? And it was a moment where you decided, okay, we have to make this book happen, maybe in the mountains or at the lakeside or in the garden. Can you think of a particular moment?
Well, the main thesis, as Vanina alluded to, is that I mean, we have seen two really big trends in the past, I'd say 15 to 20 years. The first trend was this social entrepreneurship trend, which was in a way pioneered by organizations such as Ashoka, or the WEF or the Skoll Forum, where social entrepreneurs are recognized, they are being supported, they are networked, they are given awards and so on. And the other big driver was impact investing, which was created in 2008 when JP Morgan, 2007, when JP Morgan wrote a study about a new asset class, and which now has accumulated an estimated more than $500 billion of committed capital. And I guess what the book says is these are two great trends. They are incredibly important in this sphere to make capitalism more inclusive. But what is really needed now is to put these two trends together and to make sure that entrepreneurs know how to leverage capital and to help investors essentially support entrepreneurs in a way that this capital is then fruitfully deployed for impact. And that is what the book is about. It has several chapters. One chapter describes how we operate at elea with our operating model that I described before. Another chapter also describes with many examples of our entrepreneurs of how enterprises are created with business plans, with building organizations, building teams, navigating through crises, which happen with almost every enterprise that we have encountered. And then it derives a lot of practical advices that can help both investors, philanthropists on one hand, but also social entrepreneurs, impact entrepreneurs on the other hand.
Fantastic. We have a lot of questions already in the chat.
Yeah, and let me add just one little thing while you see the question. I think an additional chapter that I like a lot is a chapter on governance, because many times this is an issue that you see in large corporations, but sometimes it's something that is not regarded or not put in the proper priority for impact entrepreneurs. And yesterday I was talking to commercial impact investor about he's doing debt restructuring now. And I said, what would you say is the main thing why companies fail or they need to go into? And he said, poor governance, bad team and poor governance. So I think that chapter can be also a very innovative piece of the book that you don't see often in these kinds of entrepreneurship and impact investment books.
Makes sense. Thank you. Ekkehard, over to you.
Yeah, thanks. I think we keep on picking your brain on these issues. Actually, Leonard had an interesting question. Leonard, do you want to open your mic and ask your question directly?
Yeah. Hi. Thank you so much. It's me, right?
Yes.
Okay. So I'm a social entrepreneur. I just took my master's from Goldsmiths in London, and I'm really interested in in impact investing. And so I would like to know, what's your advice for someone who is just starting and wants to get into it?
Thank you. Please, over to you both.
The obvious advice is reading the book, right? Well, it's very hard for me now to answer, given that I don't know what area you're invested in and what type of project do you have. I mean, what we have seen in our work is that social enterprises go through 3 different phases. They start with a kind of conception phase of where business plans are written, where ideas are conceptualized, where people contribute to business plan competitions or to labs and so on. And at some stage, something is specifically concrete, specifically exciting, and specifically demanding that the entrepreneur has to decide, I'm putting my life to it. I mean, that's what I'm going to do for the next 10 years. And that's when the really tough part begins, because then it's no longer a few 10,000s from family and friends and maybe your own and maybe from angels, but then it's a few 100,000 in terms of investment. And then it's also about building an organization. Then it's about hiring people. It's about mastering your strategy. And that's when you need some form of a philanthropic investment support typically. It's not always called like that. It's sometimes also called venture philanthropy, or it's called I mean, even traditional venture capital has a philanthropic connotation to it sometimes. And I think that's that phase where you need to bridge this pioneer gap, where essentially risks are rising faster than revenues, and where you have to get through. And this period can take anywhere from 2 years to 5 years to 7 years. I mean, it really depends on what the subject matter is. And at some stage, you reach stage 3 when you're sustainably, economically, when you have proven, when you have a clear strategy, and when you can attract commercial investors with both impact and financial returns. So that's, and we have structured the book a little bit along these phases with different recommendations in different phases.
Yeah, I will answer on a little bit on because I totally agree with the stages that Peter mentioned, but I will go more on a personal side. I see you're a relatively young person, and I had the opportunity to work with students from the university and mentor some entrepreneurs. And I think there's a professor I like a lot in Harvard called Marshall Guns, Marshall Guns, sorry, that's another book, Marshall Guns, and he talks about social movements, and he says, and he helped Obama actually with a lot of things, and he says there has to be 3 components. One is self, then is us, and then is now. You know, so I think that social entrepreneurs or impact entrepreneurs needs the same thing. First, self. Why you? Why are you going to pull this off? What is your purpose? What kind of problems you want to solve? But what kind of skills and abilities and social capital do you have in order to really pull this off? And then the us, because it doesn't have to be just something that is just you. You have to build a community. You need to be embedded in a certain area. You need to collaborate. You need to find a problem that represents a lot of people in order to really have a market. And I would say that the last one is why now? You know, why that sense of urgency that makes you act, that also will make other investors to look at you and say, yes, we need to solve this problem, and that will want to be part of that solution. You know? So from my side, it's a little bit of that. Build a strong pitch or a strong story around those things, and also hang around a network that now exists everywhere, almost, with big corporations, with entrepreneurs, and get embedded of what's happening, because you will learn a lot from other people.
Thanks, so that's a great advice. And I mean, I would add to that, Leonard, for you as an offer, actually, and that goes certainly to everybody else in this call as well. If you want to find a community of like-minded people, please do reach out to us. I think we were certainly interested in continuing that conversation later on. Before I hand back to Renate, I actually had there was one question by Philip earlier already on, and I'd like to give him the opportunity to ask this question directly, because I think it very nicely fits into this whole idea of partnership. Philip, if you want to unmute yourself and ask your question directly.
Yeah, sure. Thank you, Ekkehard. My question related to the work we do. I work for the international organization, the United Nations Conference on Trade and Development, UNCTAD, and we work a lot at the entrepreneurship section, and we work a lot with entrepreneurs, sustainable entrepreneurs, and we invite them in webinars and workshop and to pitch also their business ideas in Geneva. And we have no way of agreeing among ourselves, because several sections and several organizations work with sustainable entrepreneurs, and we have no way of agreeing among ourselves what kind of criteria we should retain. And the criteria stated by Professor Wuffli were nice, but my question is the following: how can we clarify them and standardize them in order for us to have a simple method of recording and placing these entrepreneurs into some kind of a template, so that we can pass them on, or at least contribute to a pipeline of sustainable investment that could be useful to institutional investors.
Thank you, Philip.
Well, Vanina has done work on qualities of entrepreneurs, and so I think there is some body of research on what makes, how can you describe and how can you standardize entrepreneurial qualities? I must say we work differently. We don't look at standards when we meet with entrepreneurs. We really want to get to know them and build relationships, and we invest a lot into their life stories. And I think that it's specifically that it cannot be standardized. I mean, when you look in our book, there is a huge diversity of different stories. I mean, our group of maybe 20 social entrepreneurs could not be more diverse. And they range obviously in terms of age, very diverse, in terms of culture, in terms of education. We have a Master of Science from Stanford. We have people who hardly went to school. So I'm not sure that you can standardize entrepreneurship. And quite frankly, what we have found, you need first to kind of find the entrepreneur and then look what idea he has. And it doesn't work the other way around. I don't think you can start with the idea and then look for the entrepreneur. I don't think that works. What you then get is employees. And not entrepreneurs. Renate smiles because we had that discussion in the briefing. And so in that sense, I mean, I'm a strong believer, and we have a chapter in the book that talks about impact-aligned ecosystems that cuts across organizations. I'm a big believer in creating bridges between kind of public sector, private sector, civil society actors. But then I think it needs to be clear on who does what. We, for example, work very well together with finance organizations when they match fund some of the investments. For example, we have experience with Deutsche Kreditanstalt für Wiederaufbau, where they de-risk certain ventures and make it attractive. I'm not sure whether public sector organizations are the right ones to identify entrepreneurial qualities, to be honest. It's just not obvious to me whether they are the right body to do that, or whether they should not more look at professional investment organizations that do that for a living. So I think in my book, it's quite tricky to find really good collaboration mechanisms where public sector, private sector, civil societies can work together, but they are essential and they are really, really critical.
I have the privilege to actually know Philippe and the work he does, and Günther and the Empretech program, and actually some of the Women in Business Award that Empretech does. IMD gives a fellowship for these entrepreneurs to come to IMD programs, and this year we had two. Last 2 years we had also people. And even though I have studied what makes, because I do think social entrepreneurs or impact entrepreneurs are different. There are certain personality traits that make them different. I don't think you can use those entrepreneurial personality traits to define success or to choose entrepreneurs. No, I think that when you study, you find a different risk profile and a different sense of purpose, I would say, from the research. But the standardization is tricky, especially at the point where you are also working, that is even earlier than Peter, where it is really at the very beginning of the process. But I do think that you manage a lot of information. You also manage cross-country comparisons. So I think the standardization of the information coming from these entrepreneurial ventures can be used for research and to understand better the process rather than due diligence standardization. No, so I think we can learn about other things that are pretty necessary. And I think you also have, I also had the opportunity to work in the policy framework. And I think also that systemic view. I think as an international organization, you can leverage government assets, public sector, and I think that's also a unique opportunity for this ecosystem building. No, that you can leverage. No, and by the way, I think it's an amazing program, and I hope to be still involved in the near future.
Thank you. I give it back to Renate for the last round.
Thank you. We have to limit it to one question, official question, because we have many in the queue. So how to lead impact enterprises? Can you give me some real life examples? I think you have many, but maybe one or two.
Yeah, I'm happy to do that. I mean, this obviously is a topic I could go on talking for hours. I think one that we have described extensively is dharmalife, which is an Indian enterprise which is providing access for rural India to goods, services, and information. Gaurav Mehta is a kind of Indian from the German diaspora who changed his life, went back to India after a successful career in financial services, and built this network where he recruits and supports and trains what he calls dharmalife entrepreneurs. They would be local kind of decision makers at villages, and he has by now built a network of close to 20,000 of those dharmalife entrepreneurs, reaching 40,000 villages and overall about 13 million people. What's interesting about his model, and there was a question before about building markets. What's interesting about his model is it's a hybrid model. On one hand, there is a commercial activity where, for example, these dharmalife entrepreneurs, they sell impactful goods such as solar lamps, such as mobile phones, such as cook stoves, safe cook stoves, or sewing machines. But he also cooperates with international organizations and foundations for awareness campaigns, for example, hygiene. He was instrumental now in the COVID situation to bring truthful information to the villages. He works with the Bill and Melinda Gates Foundation. He works with IFC on renewable energy projects. So it is for me a role model of an organization with hybrid elements. Part of it is philanthropic, working with donors, with large companies in their corporate responsibility programs, but also kind of operating a commercial activity which has financial returns. So that's maybe one example.
Very good, thank you, Peter. And I want to hand over to Ekkehard again because I think we have many questions in the queue.
Yes, absolutely. Thank you very much. And I mean, I wanted to actually go a bit broader now because we have a couple of questions around post-COVID. Now, I mean, I know that you all are fed up already with the topic, I guess, but I mean, I still think that it's interesting to reflect a bit, you know, what can we expect? So I think Anka had a question on this one, and then maybe Chris, if you just want to add to that quite immediately afterwards. So if the two of you can unmute yourself and start asking your questions. Anka, if you want to go first.
Yes, sure. So my question was, you know, now that we are coming out of the pandemic, but at the same time, we also see the rise of, you know, the climate change, the activists, we also have technology advancements and so on. So how do you see the impact of all this onto impact investing from what you see so far with Illyaway and the impact partners that you have?
And maybe before you answer, maybe Chris, if you want to just jump on this as well and add your question as well.
Yeah, no, thank you. So I was wondering if COVID as an existential threat has really helped change some perceptions of the role of government. I know Richard was saying about public bodies not being there for entrepreneurship, but in terms of funding innovation and also creating context and helping with standards, definitions, so frameworks. Has COVID changed that? Will we see a rebalancing between government, entrepreneurs, investors, and the recipients of that investment? Thanks.
Thank you. I think two broad questions for the two of you.
Vanina, do you want to start? Should I start?
I think probably the COVID piece, you can tell a little bit what happened to the entrepreneurs. I can tell you what I've seen, not only at Illyaway, but in other places. What I have seen, especially for, I would say, even philanthropic impact investors, but investors in general, I think COVID has been quite disruptive, especially because a lot of this due diligence process involve traveling and involve being near and getting to meet. And so I've seen that a lot of new investments and pipeline have been slowed down, and in some cases even dried up completely, you know. But I also see that a lot of that money went to give more patient capital to entrepreneurs to like bridge situations to support the storm, you know. And so even in cases of more commercial type of investments or even things that had targets, there's much more understanding of delaying the process and putting more money to make the transformation, because in many cases they had to digitalize, they had to establish different type of value chains, they had to do changes in a very fast way, and they needed additional money to survive. No, so I've seen that happening. I think the interesting part that I think that in many cases those social entrepreneurs that were able to transform their business models and that had some digital component now and that included technology and that are relating in a different way to clients, beneficiaries, or the way you want to call them, I think they will be stronger after the crisis. No, because now with the technology embedded, they can actually scale up much faster. So the transformation is very painful and difficult, but those that come out successful, I think after the crisis will be stronger. I don't know if Peter agrees with me on that one.
I think obviously it's very early days, and we see everything. I mean, we have, fortunately, touch wood, all our 20 active investments have survived so far. Some have had dramatic exposures, some have even benefited from the crisis. But I would agree with Vanina, in a way, it creates a more level playing field. I mean, what was most surprising for me is we could actually be in touch with our investments during the whole period with lines that actually worked, with digital connections that were effective. And I think 5 years ago, that would have been unthinkable in the countries we're active in. But I mean, we had a due diligence call last week, actually, with an entrepreneur who was 3 hours outside of Monrovia in some village. And we had a Zoom call with him as if he were here. And so in a way, I think this enormous jump in digitalization, not only technology, but also people getting used to it and being forced to actually apply it, particularly in education, I think will create a level playing field and will give access to people, for example, young people in slums that did not have that access before. So I think it has, in that sense, also kind of opportunity. Now, obviously, that's the rosy side of it. The dark side of it is COVID will push hundreds of millions into absolute poverty. And I mean, that's tragic, because before COVID, there was such an enormous progress. And we have seen already a significant pushback on SDG in terms of poverty. And so I think we'll need more efforts to kind of scale up those activities that work. I think your government question is a very interesting one. And by the way, I don't want to come across as a state basher. That's not who I am. I mean, I'm a strong believer that states are incredibly important. And I think particularly after COVID, I mean, it's incredibly interesting what states do well and what they don't. And the jury is still out. I mean, they do some things enormously well, other things they do horribly. And I don't think it's a stereotype across countries. There are some very well-developed countries that seem to be doing quite poorly on pretty basic stuff. If I, for example, look at Europe and vaccination, compare it to Chile or to Israel. On the other hand, we have seen dramatic failures, obviously, in some of the poor countries where populist governments have issued orders without any consideration of what that means, leading to tragic situations. If I look at India, if I look at the Philippines. And so I think it would be really, really important after COVID is finally, hopefully done with this or maybe next year or in 2 years, to really look thoroughly on what it takes for public policy and for public governments and institutions to excel at certain tasks and what we can learn from it. I mean, there was an enormous range of best practices and worst practices that hopefully humanity can learn from.
On my side, on the government side, and especially from the private sector mindset too, I think COVID gave us a much better sense of the systemic threat of a pandemic, and how something we thought that it was a very small risk could really destroy a lot of private value or corporate value, if you want. So I do think that with that came also the idea of public good and the role of the government and public health and public education these days and inequality. So I think those issues have are now much more at the forefront, and hopefully will help us think about policies and collaboration in a different way, you know, and understanding the devastating effect that inequality is having is such an obvious thing if you look at the answers these days, you know. So again, from a relatively optimistic view, I hope we can learn, as Peter is saying, and fast, because something we don't have is time to procrastinate on this one. No, yeah.
By the way, you mentioned Israel and Chile. The country with the highest vaccination rate is Seychelles. Obviously,
okay.
Small.
Very small one.
Africa rocks, as they say. Huh? Thank you very much. Thanks for your great insights. I give it back to Renate for some concluding remarks, and I thank you all for your active participation in this webinar so far. Thank you.
Thank you. Thank you for this interactive discussion. So now it's time for a 30-second final statement. Ladies first. Vanina?
Good. So just Renate, to remind before the 30-second is we are giving some ebooks. You can decide, and the people that participated, some free ebooks so to give to the audience. So please manage that later. And just for me to close up, it's just it's not about money. No, it's not about putting money into problems and just looking at impact investing as a way of mobilizing private capital. No, and I think something that I learned from the relationship with Peter and with the Elea Foundation and my work is also start with the problem. No, look at what is the problem and then understand it, collaborate, co-create in those markets and come up with the best solutions, be in products, be in service, or be in financial tools. No, and in that process also become a partner and build a market. No, and from the IMD, we hope to play a role as an academic institution, conveying the different players and just letting you know that you can happily to please contact me if you're interested to continue this conversation.
Thank you, Vanina. Peter, 30-second final statement, please.
Well, I'm a strong believer in capitalism as a force for good, but I do think capitalism needs to become more inclusive, and it can become more inclusive when impact entrepreneurs and impact investors work very closely together, and when enterprise collaborates with public sector institutions and with civil society actors. So I think the task and the challenge is to build bridges, to collaborate, not to build walls, not to polarize, but essentially to collaborate and to build ecosystems that help make capitalism more sustainable.
Wonderful. Please join the Geneva Microlabs. That's also our goal. I really enjoyed our discussion today, and thanks to Vanina and Peter, we have a goodie. Vanina said it already. We have some free ebooks that we are giving away, and the first 3 ones who leave a comment on our LinkedIn page, and Marianne is posting the link in the chat now, be fast. If you leave a comment that you are interested in the ebook, you will receive a free copy. The first 3 ones who leave a comment on our social media page.
If we have many, I can add some more.
And where can we buy the book?
And for those who want to buy it, I just want to say that Vanina and I have donated all the money that we would get, all the fees to Elea Foundation. So Elea benefits from any proceeds, and you can buy it anywhere. You can buy it at Amazon.
On Amazon. So
and
money
goes
directly into the entrepreneurs.
You can buy it in a beautiful hard copy like this. You can buy it in an electronic version as well.
Wonderful. Thank you.
Great.
If you are near Geneva or Zurich area, if you buy the book, you let us know and we go and sign it for you.
Wonderful. Thank you so much. I really enjoyed this discussion and the very proactive discussion. Special thanks to our distinguished speakers. We will publish the recorded webinar later at some stage, I think next week, on LinkedIn and on YouTube. And please reach out to us. We have the different channels on our slide, how you can get in touch with us. And also, if you want to support our work at this at the Geneva Microlabs to make these online talks happen, we'd be delighted to have you as a member in the Geneva Microlabs. And Marianne will post the link in the chat how you can register as a member. Please sign up next time. On the 17th of March is our next impact talk. We will welcome Jonathan Normand, the founder of B-Lab Switzerland, who will talk about impact measurement. In the meantime, please stay well, please stay healthy. Look forward to talking to you again soon. Goodbye for now.
Great. Bye. Thank you.
Thank you, Renate.
Thank
Bye-bye.
you.
Thank you.
Peter.
Bye-bye.